Tuesday, April 9th, 11 p.m. Quick one-up video for you wonderful ladies and gentlemen. I jumbled around the one-up videos and the midweek video this week because we have the CPI data at 8:30 in the morning, and I thought that it would be most useful, and apparently viewers did also, with a poll we took to do that video on Wednesday that would include that data. As far as the Fed probability goes, still 51% that they're going in June, but that could rapidly change if we get a very hot CPI number tomorrow. I'll be very curious to see if the Fed heads jump in and they either poo-poo it if it's a hot number, or they start talking it up and start looking to cut down the number of rate cuts going out and maybe even pushing it still further out. That seems to be the game the Fed has been doing. They seem to have pivoted, and that has been confirmed by Powell, but they have not committed yet to actually doing the rate cuts. It's been more jawboning, and I think they're doing that to, number one, allow the Treasury to fund itself. This all started the pivot when Yellen basically said we can't fund ourselves with 10, 20, and 30-year treasuries, and we're going 3 months, 6 months, 1 year, 2 year. Treasury doesn't want to do that. They want to go further out. So that's when Powell pivoted and was accommodating. Now, whether they actually start doing the cutting is another story. The market was at 7 cuts. Now they're down to 3. It could go down to 2 and maybe 1 and maybe none, which Kashkari hinted at. As far as VIX goes, it has not been able to hold any real rallies. Anything below 1604 to me is still sideways to lower. If we can clear there and then we could clear 1693, I do think we're off to the races, probably to 1785, maybe even into the 19s, 20s, and possibly higher. I think a pullback into the 14s now winds up being support because there's the 20 and 50 MA and prior trend line down there. As far as the SNNQ go, we're hovering around some very key levels. The bulls really do need to hold 52, 57 quarter and clear 52, 82 quarter, and really 53.08 half, but I'm going to just say 5300 to keep it super simple. Anything below 5300 really could just be noise. Anything over there to me starts negating the decline and really getting things going to the upside. I don't think shorts would be happy if we got over 52.82 quarter. As far as the Qs go, similar setup. They need to clear 18,41475, and if we're going to be top graders, 18,568. Anything over there I think negates the decline, and we could see sideways to higher. Below there, we could see a move down to 17,938 half, and in the ES, if we do wind up having a larger liquidation break that can hold the Thursday low at 51.91 half, we could see 51.6775 down to 51.57, and then we'd see, if not, then we could probably come down to 5100. Last Thursday's lows were sort of poor lows, and they may need a repair. Often what you'll do is you'll come down, you'll see those poor lows, check back to the breakdown, and then go lower. So it's still to be determined what happens, and I think the CPI number would be the impetus for that. Remember, we're at a funny time of year here in the early part of April. We're in a pre-earnings buyback blackout, and we have the tax day next Monday. So there's going to be a lot of quote-unquote forced selling in some of the big names to fund tax bills. How many shares of NVDA do you have to sell to pay your taxes? Very few. Although that's starting to get smacked a little bit too. When the leaders of the market start getting hit, it starts getting a little problematic, although NVIDIA is really being offset by Google and Amazon and Microsoft to a large degree, but it is still the market general at this point, and they are now apparently fearing competition from Intel and maybe even Google. As far as SPY goes, very wild trading today. I think if we can settle above and hold 520.44, we could see still higher prices. I do get increasingly more concerned when we're below 518.22 to 518 quarter. Anything below there to me does risk still lower liquidation break, and if we start taking out 514, I do think we could take a run back down to 50 MA at 508.12, which would line up with the true range low from 315. If we can hold up over these 518s, I do think we could matriculate our way back up to the 524s. As far as Qs go, I think it's very simple. 50 MA better hold. 436.73, anything below there, I think retest that 433.65 to 432.74. Those are the reference lows from 3.5 and 3.15. If that area holds, I think it's sort of okay. If it fails, we could come down to as much as the 221 gap fill at 425.61, and that would be a bit of a larger correction than we've seen recently. I think if we can get up over and stay up over the 443.02, we could come back up to 446.58 and maybe even make a run back at 449s. We may just be in a big chop zone for quite some time. We really need to see, though, is a break out of that zone for trending either up or down. After large runs, you don't necessarily have to have huge corrections. You can often consolidate by time, not necessarily by price. As far as NVIDIA goes, pullback has been sort of mild. This 823.94 was the 223 breakout. 50 MA is right below at 808.36. For me to get bullish on this, I think if we got over the high of day, 876.35, you probably get a run back up to the 20 MA at 897.94, but for me, I really need to see at 900 plus. If that can take place, we maybe take a run back up to 950. Right now, it does look like some sideways consolidation, but don't get too complacent here. I would use pops to trim some gains if you're already long and you haven't booked some gains already. As far as Amazon goes, very nice move the last few days. We are seeing a little bit of selling up here. 185.65 is the reference high, so it makes some sense that some people are front running that a little bit. If we did make it to channel high, that'd be roughly about 200. I'd start getting more concerned about pullbacks if we couldn't hold the 10 and 20 MAs. 180, 185 down to 179.44 and rising. That 3-4 breakout of 180.14 is a good middle point there. That really does need to hold on pullbacks. As far as Google goes, big move up today. They introduced their new AI chip. Anything over 155.27 to 155.74, let's just say 155s, I think is sideways to higher. Below there could be a liquidation break down to 153.78 and maybe even to as much as 151.55. That area to me would be a buy the dip, at least right or right out, but it really must hold. If we do keep going, 161-ish is channel high, so again, I do like trimming gains into up moves there. Microsoft still hanging in pretty tough. Actually trading very well. Anything over 420.82 I think is still sideways to higher, and if we can clear that reversal candle from 4.4 and get over 428.67, we could make a run back up to 430s and maybe even make a run to the 2 times range, 458.91. Apple seems to be trying to bounce. Not really that convincing, but anything over 168.49 to me could be sideways to higher. 20 MA would be in play at 171s. Maybe they even make a run up to the 177s if there is some allocation money, but I do think this is still sideways to lower until we can start clearing some of the breakdown levels from 180s, and 165 would be the reference lows, and if that fails, we could be coming down to 158s and 146s, which are 2 and 2.618 fib extensions respectively. Keep an eye on TLT tomorrow. We are still holding some key zones, but if this starts losing 91.48, I think it's down to 89s quickly. If we do continue bouncing, we probably see 93.10 to 93.61. That area could be some resistance. There's a stacking of MAs up there. Maybe the overshoots to 93.90, which is the 200 MA. As far as TNX goes, keep an eye on 43.33. Anything above there to me remains problematic. Below could see still further liquidation break, and that would be good for PE multiple premiums. I think the dollar is going to be what sets things off if we do get into a bad way. If the bears can get this back up over, and when I mean bears, stock bears, over 105s, I think that does jump off a correction. We are nearing some support at 103.817 to 103.448, so pullbacks into that zone are probably buyable, but I'd feel more comfortable owning this on momentum on a breakout over 105s, because I think you could see 106s, 107s very quickly. Nasty little reversal in Bitcoin, still holding the 20 MA, 68,578. We do need to get back up over 69,355 to 70,195 and then really clear the 328 high at 72,495. I'd feel much more comfortable over that 72,495. We could just be in a big chop zone between 65,000 and 72,000. Keep that as a possibility that we could just be in a big consolidation flag, but Bitcoin is a momentum play and I'd feel most comfortable when things are trending. We're going to get the CPI data at 8:30 a.m. Similar to Fed days, similar to job days, we get that initial spasm. Use the 15-minute range. You could use a 5-minute range if you want. Anything inside of that to me is neutral. Above is bullish, below is bearish. And then we could use the CPI data range, similar likely we use with the Fed day and the jobs day. And then anything over that is bullish, inside is neutral, and below is bearish. Still like using up opens to book gains, raise stops. Don't get too complacent. Don't get too greedy. Things are, we know, extended, and we know we're into a seasonally weak period these next couple of weeks. After we get through tax day, we could maybe see some 401 allocation money, but until then, I like sticking to that playbook. If you're unsure about stocks, generally, we like to be long things over 10 MAs. Pullbacks to 20 MAs are okay as long as they hold. If they fail, we like to short bounces into those 20 MAs. That's it.